Welcome to another S&P 500 analysis. Today is January 23rd, 2021. The S&P 500 finished with another record high for the week and a new closing high on Thursday. Many market participants are feeling uneasy about the current melt-up and wonder when it will end. I don't know anyone that have a crystal ball to predict when the market will do whatever it say it might do. But what we have are the internals that will give us a clue on what the market might do. So in this S&P 500 analysis, we'll review the internals, the sentiment, and the indexes to see what the market is telling us. Stay tuned. Looking at this weekly chart, we see the S&P 500 had a range of 81 points for the week and gained 73 points, or almost 2% for the week. And the 10-week and the 40-week moving averages is still up, and the price is still above this megaphone channel, and also it is one-time framing up. So right now, the trend on a weekly basis is still up. And looking at the sentiment chart here, we see the VIX is still hovering near the lower bound of this zone here between 20 and 30. It finished the week at 21.91. So there is still not much fear, but there is a certain degree of caution. And on the put-call ratio is close to 0.5. It finished the week at 0.49. So the risk is still on based on the market participant sentiment. And here we see the up-down volume ratio on Friday. It was a little bit positive, more up volume than down volume. The up-down volume ratio was 1.18. And the advanced decline, the advancer led the decliner by 144 issue. Although the S&P 500 did close down for the day and was down about 11 points and down 0.3%. And looking at the New York Stock Exchange new high, new low, there are more new highs than new low, and the new high outnumbered the new lows by 156. And here looking at the New York Stock Exchange cumulative advanced decline line, we saw this earlier negative divergence. And finally got resolved on Friday, the following day, on Thursday, we saw this negative divergence. And then on Friday, we saw that with a positive divergence, we see the advanced decline going up and the index, the S&P 500, closing down. Similarly, in the NASDAQ market, we saw the NASDAQ 100 close down 38 points or slightly less than 0.3%. But the up-down volume ratio, was 1.64. So there were 1.64 times more up volume than down volume, and the advance lead the decliner by 802 issues. So that is also displaying a positive divergence. And once again, the new high outnumbered the new low by 240 issues in the NASDAQ. And similarly to the New York Stock Exchange, it showed a negative divergence on Thursday, and the cumulative advanced decline and the index show a positive divergence on Friday. So the negative divergence got resolved with a positive divergence. So overall, sentiment internals have not changed. They remain positive, and the market participant remain risk on. Now let's take a look at the daily price chart of the S&P 500. Looking at this daily price chart of the S&P 500, you can see the prices continue to hug this channel upper trend line, and we're still monitoring for the upside target somewhere around this 3,900 level. And if it decides to pull back, then we're basically monitoring this 3,720 as the potential support level. Remember the target that we are monitoring, it started out from this Fibonacci extension of 127. Right now, it's basically working up toward this 141 area. So if it exceeds this 141, then we'll be looking at this 1618, and that could be above the 4,000 level. But right now, we are still monitoring the 3,900 area. And looking at the NASDAQ 100, we can see the NASDAQ 100 is also continue to move up. And we're essentially looking at this initial target here, 13,515, the 618 extension. So we're going to keep on watching for that potential target on the upside. And then on the downside, if it pulls back, there is a gap here that we will be monitoring for this gap to get filled. So come back down to this 13,000 level. And if it break below the 13,000 level, then we'd be looking at this 12,439 or 12,440 area. Be sure to watch the release of this pre-earning video for AMD, Apple, Tesla, and Western Digital. If you are not a subscriber to this channel, click on the subscribe, and to ensure you won't miss this video, click on the notification icon. And for those existing subscribers that have not turned on the notification icon, go turn it on now, so you will be notified when this video is released. Now back to our regular program. And here on the Dow Jones Industrial, you can see the Dow Jones Industrial still hover around above this this flag here that we have been using, right, to do a projected move. And the initial target that we're looking at is 32,200 plus. So right now we're still watching for this thing to come up, and there's also this channel, and it could be in a confluence with this target level here. And if it decides to pull back, then we're basically looking for initial support somewhere around this 30,000 area, and essentially the bottom of this particular channel. And here on the Dow Jones Transportation chart, we see that it is pulling back a little bit. And if it continues to pull back, then we're basically looking at this trend line down here on this channel, somewhere around 12,600. And if it breaks below this channel, then we'd be looking at this 12,379. But we continue to monitor for more upside, and that would be somewhere around this 13,384, close to this 13,400. And finally, looking at the Russell 2000. Russell 2000 finished the week with a new closing high, and also it did not make a new high on Friday on an intraday basis, but it did finish with a new closing high. So right now it's still kind of underneath this this target level here that we are looking at, this 1618, 2177. So we'll be watching for this particular target to get hit. If it does pull back, then we're essentially looking for this trend line here on this price channel to provide some initial support. And if it decides to come back into the channel, then we probably be looking at this level here. So this level here at 1395.30. So as you can see from the price action on the indexes and also the S&P 500, not much really have changed, and there are no signs from the internal or the sentiment that tell us there's a major correction coming in the near term. Although we know it eventually will come, but right now the market is not indicating that it is going to be soon. So until we see the deterioration of the internal and the market participant sentiment getting a little bit more fearful and less risk on, then we can look for the price action to possibly making a change. But until then, just ride the trend. You know, things are getting a little bit frothy, so there could be a surprise pullback, just to shake somewhat, to shake some of the market participant out. Be sure to smash that thumbs up to help me promote and share this video. Thank you for watching, and stay safe.